This week on the podcast, we have a gentleman who probably needs zero introduction for anybody that's been in mortgage for any period of time. But Bill Dallas, buddy, thank you so much for joining us today.
Hey, you're welcome. Thank you guys for having me.
This one's a difficult interview because you have done a lot. And we kind of go back and forth from, doing some mortgage stuff, doing some personal stuff. We would be crazy to not discuss your career in the mortgage industry and ask some questions about that. So I hope it's okay. We're going to dive deeply into your experience here because, I don't know if you were to create a list of like game changers in the mortgage industry, there's a small handful of people that have really done as much as you've done.
No, thank you. No, there's not. It's funny because there's not many who actually venture out to do innovative things in mortgage, right? We all have a tendency, and I'm looking at guys today like Casey Crawford or Victor or Chris George or, people that have stuck to the knitting inside their mortgage business. I've had the blessing of being able to create some extraordinary assets in mortgage. And because I was so young when I started, it was like I was learning myself about the macro challenges that occur in mortgage and then the opportunities. But then I was able to sort of morph into using some of this capital to do vendor things in mortgage. So whether it's the largest fraud detection business, whether it was Clues or Mindbox, or whether it's Cloud Verga or different things, now I was able to look under the hood of all my brothers and sisters in mortgage, which, gives me a unique perspective. And because I've spent 20 years outside of agency, right, which is somewhat where we're going today, where most mortgage banks are Fannie Freddie Jenny, right? We sell government stuff. And I just learned early on that all the money is made outside of the government stuff. And then how do you build something that's sustainable and not objectionable to the rest of the civilized world? And then how do we solve problems? So what's been cool about it is I think overall, it's been a life. I've probably done 40-ish M&A type transactions, all with my own money. I did the original private equity deal in mortgage for First Franklin in 1994. In fact, it was so early, they didn't even call it private equity. They called it merchant banking, which I didn't even know what merchant banking was. I did a deal. I sold my business the first time in 1994 to DLJ, Donaldson, Lufkin, and Jenrette, the three founders of the New York Stock Exchange, right? DLJ, merchant banking one. And all I can remember was, this is back, it has some corollary to today because it was 1994 and interest rates went up 7 times and the world shut off and volume shifted. And people say we haven't seen this before. Oh, yes, we have.
Kind of.
We've seen this exact market before. It's just today it's telegraphed and people have tons of equity. Back then, nobody knew what the Fed was going to do. And as it just kept ratcheting up, we just kept going. We became the incredible shrinking people, right? Our volume just kept shrinking. Then we went, holy Moses, what do we do? And we had to get out of products. We had to change products. And that sort of led me to boxing left-handed, which is doing stuff that's not agency, which is probably where I see today's market is we are at that apex, right? Because now you've got interest rates that have gone way up. You've got historic amounts of home equity. And now you're looking at, okay, why are people not taking out loans when they've got this amount of equity? Because before, if they had a little bit of equity, they'd take it out, right? Just a tad. And right, so what's happening? And I think all of those are interesting lessons, like you guys with lessons learned, right? I think, we don't have a lot of the problems that we had in an overheated housing market, or we do have. I think like you guys probably, I call mortgage unaffordable housing, which is basically what it is nationwide anyway. So I think you've got lessons and things that I've learned, in just trying to figure out how to navigate it. But I appreciate the call out. I've tried to give back to the industry and spend time helping other people. And as I've morphed through 40 years of doing this, I've accumulated a little bit of knowledge.
How old were you when you got into the industry?
20. So I graduated from college early, my undergrad, and started working in the summer for a big real estate firm in Ohio, and then was immediately hired to run a real estate firm in San Jose, California, that owned a mortgage company, and interest rates went from 10 to 20. In between that, so I learned hard money lending and all these different things, and then about a year later started First Franklin. So I started it right almost immediately in the epitome of I was too stupid to know that it wouldn't work, and it did. It worked, right? It was like, wow, this is like fun.
So you started First Franklin in your mid to late 20s?
In my early 20s.
Early 20s, wow.
And I was going to law school.
Right.
I was going to law school every night. I started it on Franklin Street in Santa Clara. So, of course, I'm a marketing genius. I named it First Franklin. And then I walked across the street at night, like 4 nights a week, to go to law school because I wasn't sure I was any good at mortgage. Right.
How big was it when you launched it? Like did you go like huge right out the gate? 'Cause it was,
little brokerage. So I did what we're doing. A lot of people, a lot of brokers. One of the things that I've always been good at is helping brokers take the next step. And that's why I've been more of a TPO guy than even a retail guy. But I started as the top loan officer for my own company. Right. And that's because I managed, my only job was managing one of the largest real estate companies in San Jose. So I sort of knew the realtors suddenly. I mean, I didn't know anybody when I moved from Ohio to California. So it was like, that was a big move, right? And if you come from West Virginia, my mom's from West Virginia, my dad was from Southern Ohio. So I come from very meager beginnings, but both my parents were educators. My dad was a school superintendent. My mom was a teacher. So I was highly educated in a very poor part of America. And then when I moved to San Jose, I was like, holy shit, I've never even seen a turn lane. Right? My first 3 tickets where I'm turning from the far right left. And the guy says, dude, you can't do that here in San Jose. And I went, well, I mean, in Ohio, we turned our lights off if we want to go through an intersection. I mean, if it was late. So I think I sort of learned as we grew, and it was interesting because the timing with interest rates going way up, we combined both real estate and mortgage into one transaction. And I'm actually seeing that come full circle today, right? Obviously, Dodd-Frank tried to unbundle it. Licensing laws with NMLS versus BRE tried to unbundle it. But I think it may live better together than it does apart. So we'll see how that goes. But that's how I started. And we did everything was hard money because everything was hard money. Interest rates were 20.
I definitely want to get at the point in the conversation where we talk about what your crystal ball tells you about the future, but I'd love to know your mindset as a young 20-something starting First Franklin and contrast that, talk about what kind of where you were, and then contrast that with 2008 when everything kind of unraveled and what your mindset was then.
Well, I think the one thing I've learned, the mindset is to be lean. So I mean, now you see GE and some of these people coming around to this Gemba and this lean mindset around lean. I think the problem with mortgage is it's fat. I mean, we're slow, fat rabbits right now. And I've never seen us our cost to produce is really high. Our expenses are really high. The process is really slow, right? Even, I mean, it shouldn't be, right? We've been doing the same thing for 50 years. You'd think we'd be decent at it by now, but we just aren't. And I think some of that's regulatory and some of it's just in this process of the consumers radically changed. And so I think when you look at mortgage today, so what are the lessons, right? That I think it's government run and everything's in triplicate. And that's why you are where you are, because there's AI and all these other things going on over here, and we don't have any of it. We fucking have like simple Nexus or something, right? We mobile. Ooh, right. Blend does this. We can do that. It's like, well, a nugget. Suddenly we're almost driving a car. But I think we're analog and we're historic and we're almost prehistoric, and that's killing us. Right. And then you're run by two government agencies that are bankrupt, now making money hand over fist, but whatever. And the Jenny Mae, which doesn't have enough people to run like a small utility. Right. So and we deal with the largest single investment that people ever make and probably their most coveted asset. I mean, does it make any sense? It doesn't make any sense.
Of course not. Yeah.
No.
So my view, when things don't make any sense, I think the bottom line is that to run a business. I mean, I will go back to, the good to great and what I've learned. I knew nothing about what I was doing as a CEO, and I've always been a CEO or a president. And so part of what I would say to people is you have to be willing to learn and be trained and find the smartest people that you can find and listen to them and then try to implement what they did. And luckily for me, at a couple events, I met a guy by the name of Jerry Faust, who's passed away. Jerry taught me and how to run an organization and how to be a leader. And part of those things, I've always been a leader, right? I was always the point guard. I was always the shortstop. I was the pitcher. I was the quarterback. I was always the leader, but I led because I was really good at what I did. I didn't actually probably walk the walk and talk the talk the way I should have. And while I brought the rest of the organization up, it was not something that was natural for me. So I think if you take, now looking back, if I look at a business model of good to great, where you have to do what you're passionate, like the 3 circles that he always drew in his book, and Jim Collins' book, it was, what am I passionate about? What can I be best in the world at? And what drives my economic model? And in the middle of that is my BHAG, my big, hairy, audacious goal. And I can tell you, I've always had a BHAG, right? I've always wanted more. And what I learned, bottom line, I guess, is that the P&L and the balance sheet, the profit and loss and the balance sheet that drives the financial statements of your model really isn't about money. The P&L is about people and leadership. And the BS is really bullshit. It's not a balance sheet. We don't create any assets in mortgage. We sell everything. We're capital light. So what is our biggest asset? People that work for us and the people that we close their loans for and the data that we gather in what they give us. So that's our assets. Everything else are leases, liabilities, and loan officers. And nobody wants that shit. Mm-hmm. Nobody. Unless you're already pregnant with it and you got a bunch of them. Hey, let's get more of them. Well, why do you want to get more? We're losing money on every deal we do. Well, let's get more of them? No, come on. So things have to change. And so my view is that there's nuggets. I've always used the opportunity for a small to independently run mortgage bank lies in confusion. And I always use C as confusion or change. For confusion or change to occur, three things have to be there: dissatisfaction and DFR. Dissatisfaction, fear, and resistance to change have to be so broken down that you say go. And we are in the middle of that right now.
Yes.
In mortgage, right? So what, like you would say, what is the opportunity? Then if you had to look at your crystal ball and you had to say, okay, if we looked out a little bit around what we do, right, what would that be? And that's what I'm good at, right? Trying to make sure, because part of that is survival, right? And I think if you look at the companies that are big today, right, they are the ones that just happen to get through the knothole. I mean, Victor was a broker. Gilbert was a broker. Matt was a broker. Chris George was a broker. The NAV folks are the brokers, right? I mean, just keep going down the path. You could pick any of them. They were all brokers. They were customers of mine in the old days. And so what has sustained them? What made them good? They survived all of these things. And come hell or high water, and like you said, 06, 07, 08, there weren't a lot of survivors in that flood.
No.
Mm-hmm.
And so I think those, when you look at it, the cool thing about this is I don't think it really matters how big you are. I really don't. So, and too big to fail was sort of one of the lessons learned before. We don't have an overheated mortgage market, right? We don't. We don't have a lot of listings, so we don't have a lot of transactions because interest rates went up Richter scale numbers, right? So now we're sitting at sevens. People were waiting a little bit. So, and you've got this unaffordable asset, and now you've got digital and analog in your government run, right? So if you take those things, that's the mosh pit that you're sort of given as an executive to try to figure out, okay, what do I do next? And what I'm good at is helping my own companies with my own money figure that out. And now I've been able to actually work again with other mortgage people, and I think they like it. Because it's
you're also willing to talk
lonely
about
at the top of a mortgage company, because you're basically looking at the mirror each time, or talking to your brother or some other whack job who doesn't know anything either. And so most of these guys just come, what do you think? Well, should we, I mean, some are even saying, should we just shut down? Well, it depends. What are you passionate about? What can you really be good at? And what drives your engine? And right now, you got to cut your costs and survive.
you've been willing to have that hard conversation about cutting costs, which is something nobody likes to talk about because it leaves a black eye on the mindset of the business, or it affects the psyche of the business. But you talked so brilliantly in a previous interview I read about, if you add production through the recruitment process of loan officers, you're basically adding 10 cents on the dollar to the bottom line. But if you cut costs, if you cut $1 out of your expenses, you've just added $1 in profitability to the bottom line. 100% versus 10%. Those are hard conversations to have. And even people who are on the hook for that P&L, people who own or run businesses, have a hard time listening to that. How does that reconcile with this attitude of a relational model of the mortgage business versus being very pragmatic in those decisions about?
Great question, right? Because I think everybody I've always said, we sort of manage a hair salon and a daycare at the same time, right? So how do you do that? Well, it has to be conversational. It has to be relational, and you have to be passionate, and you have to love people, right? So you start with that, and that's what we've always said in times like these, right? It isn't about not being able to have these tough conversations with people. It's about having those tough conversations and explaining yourself on why you're doing it, what you have to do to survive, and then trying to be as helpful as you possibly can to the people that aren't going to come along with what you're doing, because they got you to this point. But like you said, some guy, one of the gentlemen I was talking with who owns a business in Ohio, said, this is tough, right? Because the first cut, those people didn't do much anyway. They were float valves. And then we started cutting people that actually did a lot, but weren't integral. Then we started cutting people who were integral. And then we started cutting relatives and friends. And I think we're in the fourth. I mean, now you're actually trying to figure that piece out. And so I've said that there's so many economic pressures that you don't control when you manage a mortgage company. You have to be able to, if you think about it as the EKG of somebody who's having a heart attack or they've got an issue, it jumps all over the place. Your job is to normalize that EKG, even with economic markets and all new buyer models, any convergence of things that are happening in mortgage. And how do you distill that into a why that keeps people passionate about what you do? And most of that is consistent, concise, and clear communication about what and why you're doing something. And that even works, I think, in firing someone or laying people off, right? I think there is a right and a wrong way to do it. And we've read about Better, where you just email or have a Zoom call. You can't look, there's nothing tougher than those conversations. And they have to be done with love, and they have to know that it's in your heart. And my first question is, how can I help you? Mm-hmm. Right? This isn't going to work here, but you're going on LinkedIn. What can I do to help you? What do you want to do? A lot of people who came into the business really, they don't understand our business has always been about 75% purchase and a little bit of refi. And then we had 20 years where it was all refi. And then we have a few years where it isn't. Like, it hasn't really changed that much. It's just you hadn't seen the prior 25 years.
Yeah. You got in 2002, and so you haven't really, you rode rates down to 3%.
I've just been able to be in it when it's gone from 20 to 2, and I haven't seen it go from 2 to 20, and hopefully we won't, but from 2 to 7 was hard enough, right? And so now what, right? And what will happen? And I think that, and then you've got the originator, I think the variable, well, you've got all the legislation and all the regulation that came out of 06, 07, 08 that we're still fighting in a lot of ways.
Yes.
On QM to DTI, to the agencies being defunct and bankrupt, to reverse, to all these different things. Dodd-Frank, we're all still trying to figure out compensation laws. And then you look at really probably the biggest thing that's probably hurting retail is just net branches.
Right.
And this movement around, and it's doing the same in real estate. If you talk to anybody who runs a massive real estate company, it's teams. Teams are beginning to affect realtors. And then you've got the same thing inside of mortgage. You've got all these little fiefdoms teams that operate separately under a different brand. That creates licensing issues. It creates, consumer issues. It creates, I actually not sure it's totally legal. And yet people still say, if we're not supposed to be paying people based upon the profitability of a product or different products, Isn't that what we're doing? I mean,
Okay.
so what's interesting is that cost structure is so high that's killing everybody. So the weight of the business is actually falling on it, and yet nobody's changing, which is
Okay.
like,
Everything in me wants to go down that compliance trail with you because this is one of my favorite subjects. But I'm going to bring you back to you had with First Franklin, with Own It, with Finance of America. Those companies were rocking. I mean, really good companies, running really well, happy people, successful people. Market just pounds on you guys. What I want to know from you, and I've always wondered this, you're at the top of these companies. On the way out, on the exit, how do you, like, you're such a positive and like, we got this, don't worry, we got this kind of guy. When that happens, it's got to be a dark time of something that you built, seeing it no longer exist. How did you deal with that when those things happen?
yeah, I mean, failure is really your next success, right? So I think a lot of it is maybe my sports background, in that I'm constantly trying to get better, and I'm more concerned about my teammates than anything. So I think when it fails, or when it's, what's funny is I shut Own It down before the shit hit the fan, and that was probably my finest moment ever, because we
That's
made
pretty
money,
good
my
timing.
investors made money, I made money, and yet when I'm getting chills thinking about it, because we called a meeting, and I had about 30 branches. We're doing a couple $1 billion a month at that time in volume, so a lot of volume, all non-agency. And we called this group together, and I said, this is what I see, this is what's happening. And what we were seeing was, we invented the 100% purchase, right? Full doc, 100% purchase, 80/20. And we were doing, that's all we did was purchase, right? Why? Because I've been around. I don't want to do refunds, right? I want to do purchases. Why? That's what I do. I power purchases. And what we found was we were starting to see EPOs, early payment, and FPO, first payment, Ds, right? So not a lot, but enough that it was alarming. Sat down with the team, said, this is what I'm seeing. And they just went off saying, yep, we're seeing fraud, we're seeing this, we're seeing all these different things. And I went to my CFO at the time, John Duhadway, and my other partner, Bruce Dickinson, and we sort of looked at each other and we went, holy shit. And so we said, is this what you guys see? We then came back to them, had a meeting, and to the person, they all said we should shut down.
Wow.
Which was like, and then what we decided, which a lot of them will tell you, is, so my crystal ball at the time was, this is going to blow up bigger than anything that you've ever seen. In fact, the guys that if you read you go through Moneyball, but if you've actually seen any of the movies around it, we met with most of these people because we were securitizing through B of A and through Merrill Lynch. They were our partners, right? And what was interesting was that they didn't really see the same thing because they didn't want to see it. And the team said, we agree. Then we said, okay, what's going to happen next? What do we think is going to happen? And so the strategy then was, get to retail as fast as you can. Don't try to go back into TPO. Don't go into wholesale. Don't try to go get another job doing something else. Just get into retails. And that served most of these people well over the next decade. Because right, wrong, or indifferent, TPO got the brunt of the blame for. Yep, brokers, bankers, and Wall Street. Yeah. Right. And so I think in all of those situations, and Finance of America was interesting because the company just made a strategic decision to center back around reverse. And yet we knew the ship that this was going to be tough and long. So I actually think we made the best decision in those two than probably any. Because if you look at the struggle, do you really want to bleed out like an aortic tear and just spend all your money? Or would you rather just, we're done, we can't be, and what I said is we can't be best in the world at it because we don't care that much about it. Finance of America is more of a financially engineered company that was owned by Blackstone. And in its bowels, that company was interested in financial products and services more than it was in retail. I was the buffer zone that sort of helped them culturally understand the customer. And you know who the customer was? Their freaking employee. Right? The number one customer is the employee.
Absolutely.
And so I think in those situations, it was the same. Our team stuck together. Our team's still close, no matter where we go. And I think it's a lot of that is due to just being honest with people and being way up front. When you get into big organizations, they have a tendency to not want to talk until they fully know everything because they're so concerned about the liability of stuff. And my view of that is that's just a bunch of crock of shit. If we know something, what should we do with it? We should talk to our employees about it first, even if it's painful. And that probably doesn't put me in favor sometimes with legal, compliance, other people. But frankly, I want to be able to sleep at night and know that if you guys work for me, we are always having adult conversations about what's going on. And you like that. Nobody wants to be surprised by something.
Well, when you talk about
the more they know, the better off they are and the better employees they are. And even if it's painful.
Well, when you talked about addressing the issue of downsizing in a market like this or in a previous market, and you've had previous transparency about the business and how it's being run, it makes that hard conversation a hell of a lot easier because they aren't surprised. They are aware 6 months prior that we're heading into difficult times or dangerous territory.
And that's what we've generally said is there are triggers, right? So a couple things that we did just in general, every employee for some reason should rate themselves. Right? Are you a 5, 4, 3, 2, or 1? And if you're new, you're a 1. You've been at it for a long time, you could be a 5, somewhere in between, right? And so we have people do some self-assessment of them, of where they think they are in an organization all the time, right? I don't like monthly performance reviews and 6 months. I mean, but I do like that. You should know who you are and where you fit and how valuable you are to an organization, 1 to 5. Then I think you're having trigger conversations. If our apps get below a certain number, shit's got to happen because we got way too many people. If our apps drop to, and so that's the way we did it, is have this is the conversation. And when they know when application volume goes down, funding volume follows, and blah, 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 right? So I think a lot of it is just trying to make sure that your employee base knows and they feel, they don't feel surprised, right? They understand that this is a business and that the times that it doesn't work is where it just comes out left field and suddenly what I didn't know really. And that probably in call centers and in some businesses where it's not quite as relational as it is in mortgage. I mean, in mortgage, we're all brothers and sisters. We're almost all related.
Yeah.
as a result of where we've come from, right? And we're all spawned by government lending. So and independent mortgage banks, what I've loved about it is that independent mortgage bankers put it all out on the line every day. right? And we're in mortgage 24/7, 365, almost irrespective of interest rates, right? We have to do loans in order to get paid. That's at the bane of our existence as well.
Do you have you mentioned having it be lonely at the top, and I worked at Option One. I don't know if you know that, but Bob Dubrish was one of my heroes in the business. There's not a lot of people that are in that circle. Did you find people that you could connect with to go, what are you guys doing? Like masterminding at that level is kind of hard to come by.
Yeah, all the time, right? And even today, I think, I have a few people like Bruce Paradis, who ran RFC or GMAC RFC, Angelo Mazzillo. You talk to Mike Perry, who was at IndyMac or Countrywide. I mean, there are many people that you can kibitz with or you can talk with that help you know that. We actually created, when I was at the MBA, we created a conference called today, the President's Conference, right, where we brought people in. I started Canby, really, with Chris Salazar, with California Association. We started NAMBY, right? Why? I actually think it's important for leaders and people to get together. Now, those events have become more vendor events over time, but when in the old days, those events were for you and I to talk and for us to actually bring deals in, to actually show them to investors and talk to people and find, it wasn't like, we didn't have the internet and we didn't have cell phones and we didn't have technology. Technology to me when I started was this electric typewriter that when I turned the electric typewriter on, it actually made a hum. And it actually hit that button and it goes, and we thought, wow, now we're ready for business, right? Now, you got other challenges. So I think for us, it was important, because it is lonely at the top, to be able to have conversations with people who had come before me. I credit the CMBA with really providing me with the ability to collectively meet and talk to people who were icons to me. And whether that's Gary Anderson and the people at Directors Mortgage, or I just picked people who were, their businesses were on a rocket ship, and I basically sucked them dry for information. And the cool thing about going to these things is I could come back to my business. I was wondering, why aren't people changing? Well, they go back, they were owned by an SNL or they were owned by a bank. They couldn't do anything. I'd come back with thousands of ideas and thoughts about things that we could actually change. My challenge was really trying to build a business that was sustainable over markets and volatility. And I didn't really understand that my business was operating a little bit like a startup would, where I'm sort of adolescent, and I created all the adolescent problems that a founder creates. And so what Jerry Faust, and I'll circle it back, the guy that actually helped me the most in my business, and this was an amazing conversation. He just basically looked at me and he said, "You're the problem." And I went, "What the heck?" So what do you mean? He says, and so he taught me about the founder's trap. And when you're the founder of the organization, especially in a mortgage business, you compete for resources. People watch you like a hawk. And on Monday, you could have a bunch of new ideas and be scattering down different ways, right? You're not consistent. He said, you have to build a business that can get past this adolescent business and get into what he called prime, which is really where control, of the business and flexibility coexist. And if you think about it, like even aging, like as I get older, what is the number one thing I work on? It's flexibility.
Yeah.
I have full control, right? But I'm not as flexible as I was. I'm not as flexible emotionally and physically. And so how do you continually reinvent yourself? It's by making sure that you understand the trap of owning your own business, because you can be a dictator, or you can be Putin, Biden, Trump. Who are you to your people? And that's the founder's trap, is that, and if there are three of you, then you naturally have yes, no, and maybe into three doors. And that's not good for people either. So we sort of had that. And so I started working on that. And I tell you, so how did we do that? Everybody was trained on the methodology of thinking about how a business grows and where we are. And they all got a chance to plot where they thought we were. And then they all had a chance to understand the problems that were created. And then they all understood, as I basically fait accompli and said, I'm the problem. So these things are going to change. And they all went, hallelujah.
There's quite a lot in that. You talk about having a network of people you respect and trust to put yourself around. And then out of that, ideally, or even outside of that, comes a mentor. But the third piece you talked about just now is the capacity for self-awareness. And that's hard for a lot of people in leadership roles to allow, because it makes you a little bit vulnerable. But when you talk about that self-awareness and able to hear someone who you trust and respect and admire tell you you're the problem, you have to get the mirror out and do some hard work.
And that's a great point, because I've heard, it's like, so what happened at the same time was my first wife left me and had an affair with a loan officer. And so I suddenly was Mr. Perfect, and now I'm not. Now I'm just like the rest of everybody else. I got all kinds of problems, right? That made me more vulnerable and made me susceptible to change and wanting, because I was basically the same thing. My change occurred because I was dissatisfied. My DFR was so great that I was ready for anything, right? And I think the cool thing about mortgage is, look, I'm highly educated, but most of the real robust education that has helped me in my business is just understanding myself. Like you said, my self-awareness is I'm not the end all be all to everything. What am I good at? The other thing as a leader is, if I'm good at this, then I got to have Mr. Cleanup Man come behind me. So surrounding yourself with the right team has to be people that understand what I'm good at. And they have to love that. And then they have to ensure around it to protect me, and me to them. I'm strategic, right? I'm passionate. I'm articulate. I coalesce teams and people, and we always win. And people like that. Like, I was listening to Prime talk about Colorado and Colorado State. He says, I'm just a winner. I mean, nobody wants a loser. Well, no, that's pretty much true, right? And yet at the same time, bringing your team together, the hardest part of Finance of America was I had Noah's Ark. I had two of everything everywhere. So picking the teammates, and people would say, oh, this guy's great. This is who you should use to run this and do that. Now, I find people for different reasons. I'm more interested in making sure that you're loyal, that you got my back, and that you like who I am, and that you trust me. And I'm going to give you the same on the other side of that. And those relationships last. And that team is solid. And I think the rest of it is just trying to be the ambassador of kindness and caring and be about the people. Zoom helped me transform Finance of America, because when the industry went into trauma, they got a chance to see me. I said, we're going to meet twice a day. We're going to meet in the morning. We're going to meet in the afternoon. We're going to do this until you guys tell me to stop every day. And we're going to tell you exactly what's happening in the morning, because by the afternoon, shit had hit the fan and we'd had to change and do something else. And we probably did that for a year before anybody said, they all said the same thing. We like these meetings. And because they're learning and they're getting a chance to see us. And they don't get a chance to see that every day. And if I said
there's an elegance and a profundity to what
mortgage today, if anything's wrong with mortgage, it's that the underwriters never have to get in a bus and go out to a house and tell a customer they don't qualify because their income's wrong. Really? Why don't you tell them once? Because I'm tired of you calculating the income improperly or telling me something's wrong, and then I have to go out and tell them this is different than what we thought. And I think bringing that back together is your job. The offense and the defense and the front and the back of mortgage needs to be one, and it's not. And that is the problem. And that's why your costs have gone way up. We've got loan officers, LOAs, we got processors, we got input people, we got disclosure desks, we got underwriters, we got second signature underwriters, we got appraisal processes, we got all this shit. And yet it really is pretty simple. I've taken an app, I've made a commitment to my customer. And if we had approached it from we've made a commitment, we're just going to figure out how to fund it, this would be
That's a different conversation.
It'd be a lot more fun. I'll tell you what.
It's fascinating to listen to you talk about the things that matter. It's all relational. It's all about trust and respect and transparency. And you can take mortgage out of this conversation and make it about relationship or marriage or the nonprofit you volunteer for or anything else. This is life lived at its best.
Yeah, that's so well said. Probably the greatest thing I've ever created, and I'll go off a little bit, is Oaks Christian. I created one of the largest Christian schools in America in Thousand Oaks, California. And nobody really knows about it because I don't talk about it, right? Everybody's got a different faith, right? Which is great. But one of the things that I used to do at at Finance of America is I said, you guys mind if we pray over dinner? Do you guys mind if we just say thanks for a moment? It's going to be a non-denominational. I'm not going to drag you down the path, anywhere. But I think you're right. I think people and their lives matter. And they matter a lot. And if you can wake up every day trying to figure out how you can help another person, even if it's a teeny little bit, right? You have made this a better place. And that's the culture I want in the company, right? And it starts with little things. It really isn't big things. And the number one thing I took, at Finance of America, it was call me back. If you don't call me back, I'm going to kick your ass, right? Why? And so you can't hide behind your landline, because operations people and sales people, I mean, there's nothing more frustrating, right? When you have a problem, whether it's computer, try to get Microsoft, support today. It's impossible.
Right.
Yeah, it's not going to happen. So I think the same thing is true at what we tried to do is say the tip of the spear in a mortgage business are people, and people have to be empowered, and those people have to know what they need to do, and we have to give them the leeway to do it. And then we have to give them the kudos and the thanks and the love and the retraining and all the things that happens when they mess it up or when they don't. But we have to just understand that people are just human. They're going to make mistakes. And yet, and that's probably my blessing and my curse. I'm not a control freak. But the people around me are. Why? Because they have to clean up after me.
Because somebody's got to be.
I mean, what did a lot of people say? The two worst words in a mortgage business that was associated with me was Bill said. Bill said, right? And I talked to Casey's assistant, Casey Crawford, and I said, what are the two worst words? Casey said, right? Because all it takes is, some conversation. And borrowers and people want access, employees want things, right? So I think it really is about people and leadership. And the more you can learn about yourself, so you can understand who you are, the self-awareness component, the better I can help you understand the track you want to go on. And one of the guys that said to me is, don't tiptoe around problems or challenges in an organization, right? Go right, deal with them. And, so one of the things somebody said, what is the most important thing about being a rep? Being able to deliver bad news, good, well, and fast. And if you are a milly mouth and you can't deal with it, and you can't, things start, you got problems in mortgage.
And you're creating more problems.
Yeah. And that, I think, training of people, developing them and growing them alongside of those things are important. But I actually agree with you. I mean, I have people read a book, it's called Quiet Desperation. And it's a follow-up. It's the truth. I've actually got it here, actually. Hang on for a second. It's an old book. I mean, it's not going to cost you anything, especially as a man. But it's like Quiet Desperation, the truth about successful men. See if I can get it in there. There you go. And it was written by a gal by the name of Jan Halpern, who was a PhD. And so when my first wife left in the middle of this rates going up and the world falling apart, I had to basically, what in God's name is happening? Right. And if you read this, what you find is that all men, this is a Thoreau quote, all men lead lives of quiet desperation.
Of course.
And so I think the self-awareness to understand me made me a better leader, and maybe sort of understand, I think, not only do I understand the perils and things, it made me a better father. It actually helped me. What makes me happy? What do I want? And instead of going through life doing what my parents wanted me to do or what somebody else wanted me to do and all these different things, I finally started making decisions about, what does Bill want? And that started me down a different path as a leader, and I think as a man.
As a human being, yeah.
And now I think, look.
I was just, I wish we could talk to you for the rest of the day, because I seriously, if I could clear my schedule this afternoon, I would, because this has been gold. There's so many notes. I'll go back and watch this and take notes on it, because there's so many things you said that I needed to hear, which seems to be happening a lot as I ask people their stories. Like, there's so much there, and you've been a huge mentor for a lot of people in this industry. And so I thank you for who you are in the industry. Look forward to, of course, getting to know you more. We'll see you at Momentum Builder in a little bit here. And I just appreciate you taking the time with us, man. And again, if I could spend all day, I would love to. So I'll fly out to Vegas. I think that's where we are.
Perfect. I
But man, thank you
apologize
so much.
for being late, a little late to the call. And then
No problem.
I would say to appreciate you guys for what you do, because I do think it helps people grow, think about themselves a little bit, sort of get out of the day-to-day stuff that, you know, begins to pollute the way you think. And what I mean, that was the other pieces. I very rarely watch TV or listen to the news. Why? I don't need the extra pollution.
Noise.
I got enough, right? I'd rather spend time thinking about my 5 kids, what they're doing. And whenever I think for you and I, you guys you got a friend in the business forever in me. You can always reach out and ask questions, and I would love to be able to do the same. To just say, and there's nothing better than being totally honest with another person. Totally. Where you don't have any bullshit. You don't have any qualms about what you're trying to say. You don't have to think about it. You can just say it. Right. Because it doesn't mean, I think that's the point is we, as men, we need more of those.
Absolutely.
Right. And less of the bullshit that we put up with or we create in our own lives. And I just thank God that, I have the opportunity of finding mortgage, and even in its messed up market and everything else that we deal with, I don't think I could have found a better industry, a better group of people, and a more rewarding job than helping other people get a house.
Well, I venture a guess that anybody who watches this who knew that you were going to be on the podcast, if they don't know you already, they probably didn't expect what you gave us, and I am grateful for the time and the content.
Yeah.
Thank you so much, Bill. We'll see you next time, buddy.
Friends forever. Thank you.
Appreciate you.